guys, thanks for stopping by on my market report. This is Mike, and this report is about mortgage rates, what drives them on a daily basis. So in these reports, we kind of look at the economic reports, the headline news, and then take a look at where mortgage-backed securities as well as yields are moving on a daily basis. So a little bit of background about myself is I am a loan officer. I work with a national lender, and we handle basically the whole 50 states. If you guys got questions about rates or anything else, or about mortgages or uh, refinances or purchases, need help in any of those categories, please feel free to reach out anytime. However, let's kind of start. We'll start with the economic calendar today. Today's the big day with the jobs reports from the Bureau of Labor Statistics. We got the non-farm payrolls for the month of February. So this was actually revised. It was initially at like 49,000. I'm not sure why they put this in incorrectly, but it was 49,000. It was actually increased 166,000. So that's a nice improvement right there. Then we had a forecast of 182,000 for the month of February, and it came in at a whopping 379,000. So today's numbers were uh, pretty hot. We were talking about over, last month was increased over 100,000. Then the previous month was increased by over 100,000, and this last report came in much, almost double what we were expecting. Now, average work week hours were shortened slightly. We had 34.9. It was supposed to remain unchanged, and it dipped down to 34.6. Uh, then we got unemployment rate, which dipped from 6.3%. Forecasts remain unchanged, and dipped a little bit down to 6.2%. Now, this is pretty good. Labor participation rate remained unchanged. However, most people feel that this number is actually a bit higher. We do got people that stepped out of the market. On there, we got people who are taking multiple jobs, part-time jobs, kind of like what we experienced during the credit crisis. Even though the numbers look okay back then, but people were working multiple part-time jobs just to make ends meet, and we're kind of seeing that with some people now as well. Last but not least, we got the average earnings report. So we had 0.1% back in January, forecast count for 0.2%, and it increased by 0.2% as forecast dictated here. So overall, decent numbers. The numbers we're really looking at are obviously this one right here, the non-farm payrolls, the creation of new jobs for the month of February were fantastic. So let's jump ahead here to the headline news. Stocks are a little mixed. They've kind of been choppy of all week, and for the last couple weeks really. But even today they've been a bit choppy. We do have the Dow was kind of dipped its toes in negative, when now it's in positive. S&P dipped its toes in negative, and now just starting to get back into positive territory. Uh, Again, a lot of this has to do with yields. We'll touch on that. Yields spiking and stuff, and the large like Nasdaq people, a lot of these they're viewing as overvalued now that rely on the higher costs. Now, some of the ones that they are undervaluing, of course, are energy as well as financials. Financials do well when rates increase on your banks and everything else. They make more money, more profit taking. So those are now viewed as undervalued, so they're looking at those moving money into those sectors right now. Now, a little update on the stimulus package that we've been all kind of waiting for. Uh, it looks like it's kind of there's agreements made with the Senate, and it looks like this could be something that could be passed through the weekend here. So we should hear something maybe by Monday. But they said they're going to be working on it over the weekend and be basically signed off. So at that point, it'll be sent back to Biden's desk to be signed, and then from there passed into law, and then enactment from there. They're trying to get it done because March 14th is uh, the unemployment benefits. They want to try to get that extended prior to, so there's no lapse. And of course, they want trying to get the money out, the $1,400 out to the people in need of it. So there is some. Be aware that there are some changes in that as to who qualifies for that now. It will be different probably from the previous ones. So just be prepared for that. No details that I could find as of yet, but just be prepared. Let's take a look, see what mortgage rates are doing now. Mortgage rates are, we had a pretty bad day yesterday. We dropped up 50 basis points, which means to a half a point in cost. We had a couple rate changes to the worst. So we had, many lenders that priced at least 2 times for the worst pricing. So, and that was about a quarter of a point quarter of a rate in change right there. So at 3%, perhaps you got quoted at 3%, no points, would cost at half a point, or now might be at no point now 3.25 in the rate here. Now we did start off earlier and we were way down when the yields were spiking earlier, but since then we kind of resided back a little bit. We're up about 6 basis points right now. We'll have to kind of wait and see. The days have been pretty choppy. Been getting a lot of volatility, so it's kind of hard to dictate as to which direction will. So far this morning, it is improving. A lot of it has to do with the concerns of inflation. They don't necessarily agree with the Fed. The Fed still sounded kind of dovish. They're waiting for the Fed to kind of step in and say when the economy heats up, there's a big sentiment with all this money coming into play that there's going to be a heat up the economy maybe too much, which will create inflation. The Fed doesn't feel that it's going to happen right away. It's going to take time for a lot of this to develop into something more serious. Inflation, they feel it's going to be any spike in inflation will be temporary or transitory due to the supply chains, the bottleneck that happened there. Will have like one-time spike and then it'll probably subside a little bit. That's what the Fed is. So they're not yet prepared to start raising rates or anything else. So the market doesn't necessarily agree. So you're seeing them kind of forcing the matter by seeing a big spike in yields right now. So we'll jump over here. We touched that 1.62 range earlier today. We have subsided a little bit. We're down to about 1.56, but we did threaten 1.62, this next level right here as well. So this in turn was kind of adding more pressure to mortgage-backed securities, in turn raising long-term rates as well. All right, folks, I hope you guys have a great rest of your day. Again, if you guys got questions or anything I can help you guys out with, please feel free to reach out. But otherwise, enjoy your day, enjoy your weekend, and we'll catch you on Monday's report. Thanks for watching. Bye-bye.